How are you, Santa Claus? Happy New Year, Yamal Hag.
I am finally MP and Happy New Year to you.
Do you know, Yamal Hag, I stopped taking old people's sayings as always good guidances, because nothing is constant over time, except for the Holy Quran and the teachings of Prophet Muhammad. You know what? My father had a stand to cook and sell liver and Eastern sausage sandwiches. Before he died, he kept advising me to add onion and green peppers as much as I could to the liver during the cooking process, and to sell the big size sandwich for only £1 for the sake of poor people. He had good intentions, but his advice is not applicable, because a kilo of onion has risen to £50 each and a kilo of green pepper has risen to £20 each. Accordingly, the minimum selling price for a medium-sized sandwich is £10, or otherwise I should stay near my father's cemetery to beg and eat feet a year we bala apriyami. I am done, Yamal Hag. I am done, Awi.
Both you and your late father are right, but each at his time. If you have a wish, let me help you.
Am Santa Claus, I kept complaining to you for a long time and finally, you said if and but. Do not make me mad at you, Yamal Hag. Of course I have a zeft wish.
What your wish is, MP?
Because I am still in the School of Business Administration, I have a difficult lesson in accounting, and I want you to explain it to me.
What the lesson of accounting is?
It is the accelerated depreciation methods.
Accelerated depreciation methods are time-based. They result in decreasing depreciation charges over the life of the asset. The two major time-based methods are, 1. Declining balance method, and 2. Sum of the year's digits method. Today, I can talk to you about the declining balance method.
Do you like me to make you a liver sandwich? Or you are not hungry right now? I think you are not hungry.
Look, MP, I need you to be very attentive. Declining balance methods determines depreciation expense by multiplying the carrying amount at the beginning of each period, not the depreciable base that equals to historical cost minus salvage value, by some percentage, say 200% or 150% of the straight line rate of depreciation. Please note that salvage value is ignored in determining the carrying amount, but the asset is not depreciated below salvage value.
In shortcut, Ya Mualim, how periodic depreciation expense is arrived at under the declining method?
Periodic depreciation expense equals carrying amount multiplied by declining balance percentage. The carrying amount is decreased by the depreciation recognized. The result is the use of a constant rate against a declining balance. Understood?
I promise to understand carefully. Would you give me an example?
You have made me feel bored, since you haven't given me even a bite of an Eastern sausage sandwich with some turshi.
Did you come to give me or to take from me? Walk up, Ya am Santa. I am from Atara El Balaka and Shobra. Anyhow, I will give you whatever you have a taste for when you finish the example. Deal.
Deal, MP. Assume that Al-Hag Soso and Sons Company, the competitor of Al-Mualim Ibrahim Sardina at Kadbishaneli Bani District, purchased a robot of 5 years useful life, costing $1 million, and a salvage value of $100,000. The declining balance percentage is 40%, 20% straight line rate by 2. You are required to calculate, for each of the 5 years, the yearly depreciation expense, the accumulated depreciation balance, and the asset's carrying amount under the double declining depreciation method.
Firaz score, Dekurnis or Demandhor. Is that correct? Oops. Okay, now I remembered. For year 1, depreciation expense is $400,000, being the historical cost of $1 million by 40%, the accumulated depreciation is also $400,000. The asset's carrying amount at the end of year 1 is $600,000. Being the historical cost of $1 million, minus the accumulated depreciation of $400,000. In year 2, historical cost is no longer be used to calculate depreciation expense. Depreciation expense is $240,000, being the carrying amount at the beginning of year 2 of $600,000 by 40%. The accumulated depreciation is $640,000. The asset's carrying amount at the end of year 2 is $360,000, being the historical cost of $1 million, minus accumulated depreciation of $640,000. In year 3, depreciation expense is $144,000, being the asset's carrying amount at the beginning of year 3 of $360,000 by 40%. The accumulated depreciation is $784,000. The assets carrying amount is $216,000, being the historical cost of $1 million, minus accumulated depreciation of $784,000. In year 4, depreciation expense is $84,400, being the carrying amount at the beginning of year 4 of $216,000 by 40%. The accumulated depreciation is $870,400. The assets carrying amount is $129,600, being the historical cost of $1 million, minus accumulated depreciation of $870,400. In year 5, because asset cannot be depreciated below the salvage value, only $29,600 is charged to depreciation expense. The asset is fully depreciated, and the asset's carrying amount at the end of year 5 is $100,000, which represents the salvage value.
You are perfect, LMP. Now, where are my sandwiches?
I will give you 2 sandwiches and thank you, Santa. I will be waiting for your presents for another session.